If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. In today's episode, we're going to be diving into an interesting topic. Could Onvo, NIO's new sub-brand, be cannibalizing the sales of NIO, the main brand? We're going to look deep into the latest round of delivery data to discuss this. So it's going to be a super insightful, super exciting, interesting episode. If you're new to the channel, make sure you hit the subscribe button. If you're new or returning, make sure you hit the like button. Make sure you click the notification bell icon and leave a comment down below. All your engagement really does go a long way in helping out the channel, helping us to grow and reach a broader audience. So I thank you in advance for that. Without further ado, let's get into today's episode. Let's start by laying out the facts. In November, NIO delivered 20,575 vehicles for the month of November, which was up 29% year over year. That's a solid growth story, right? And this is key. This is the key here. There was a 1.91% decline month over month. So from October to November, they declined almost 2%. Not massive, of course, but still a decline. And if you zoom in, the main NIO brand delivered 15,493 vehicles, which was down 6.99% from October. But wait, here's where it gets interesting. Onvo, NIO's sub-brand, which is relatively new, delivered 5,082 vehicles in November, marking a significant increase, 17.67% from October. Now remember, Onvo just launched its first model, the L60, and that was in September, so Onvo's ramping up pretty fast. But the main question that we're looking to explore today is, could the success of Onvo be cannibalizing NIO? All right, so now let's think about this for a moment. NIO has positioned Onvo as the more affordable, accessible alternative to the NIO brand. The Onvo L60 in particular has seen impressive growth from 832 units in September to 4,319 units in October, and now over 5,000 in November. That's no small feat for a new brand in the market, and it's clear that Onvo is gaining traction. But here's the catch. Is Onvo taking away from customers who would have potentially purchased a NIO vehicle? We know that the NIO brand is more focused on the high end and luxury, but with Onvo being positioned as a more cost-effective NIO, essentially, it's possible that some buyers who would have opted for an ES6 or an EC6 are now looking at the more affordable Onvo L60 instead. Take a look at the price difference. With Onvo's goal to be able to deliver a high quality EV at a more accessible price, some buyers might perceive it as better value. And we saw this play out in the October earnings call. In the earnings call, NIO mentioned a reduction in per vehicle promotions, essentially lowering the price of their vehicles by $2,070 in October to stay competitive. So if NIO is already having to discount the main brand's prices just to keep up, that could be an indicator that Onvo's growth is coming at a cost. Now let's talk about Onvo's momentum. This sub-brand was launched with the intention of capturing a different segment of the market than NIO. The fact that Onvo has already hit 208 stores and 306 service centers by the end of November is a testament to how seriously NIO is investing in that growth. That's a pretty aggressive expansion for a brand that's only been around for a couple of months. But the real question here is, what happens when Onvo's production ramps up? According to NIO, the Onvo L60 is on track to hit 10,000 units per month by the end of December, with a goal to reach 20,000 units per month by the end of March 2025 next year. If Onvo can keep this pace and reduce delivery wait times, which currently stand at around 8 to 10 weeks. It could push more customers towards the Onvo brand rather than the NIO brand. The big wild card here is the upcoming NIO Day event, which features the launch of their third brand, Firefly, in 2024. The Firefly brand is set to begin deliveries in the first half of 2025, so that'll be interesting to see how that plays out in terms of the dynamics between Firefly, NIO the main brand, and Onvo. But for now, it appears Onvo's growth could be presenting a challenge for NIO's flagship models under the main brand. So what does all this mean for NIO's long-term growth strategy? Well, Onvo's growth could be a double-edged sword. On one hand, it's helping NIO expand their customer base and tap into the mass market, but on the other hand, the main brand's customer base could start to shrink if Onvo steals too many customers. NIO's ability to balance these brands and maintain its identity while scaling Onvo will be key. But let's zoom out and consider the broader EV market. We've seen a lot of competition in China and globally with traditional automakers and upstarts trying to grab market share. Everyone's vying for a piece of the pie. So while Onvo might be competing unexpectedly, because this is not the plan for Onvo and NIO to compete, they're supposed to go after two different segments of the market. With NIO, the main brand, this is all about positioning for the long-term EV race. So NIO's main brand has strong loyalists and a premium offering, but Onvo could serve as the bridge to the mass market. So even if Onvo could be potentially stealing sales, I think it's good for the company overall. Have a lot of sales. As an investor, I don't care where it's coming from. Toyota sells more cars than Lexus, right? But there's still a space for that. So, it makes sense. But looking ahead, NIO has some pretty critical decisions to make. For one, they've projected a total of 72,000 to 75,000 vehicle deliveries in Q4. It's a healthy target, but with the way Onvo is ramping up, will they hit these targets with the main brand, or will Onvo play a significant role in meeting that goal? Also, the upcoming, Firefly launch, that kind of shakes things up even more. While Onvo and Onvo compete in the mass market and the premium segment, Firefly is going to carve out yet another niche. The competition between the three could force NIO to rethink its strategy, pricing, and go-to-market. But one thing's for sure, NIO has a clear vision for the future. With multiple brands targeting for different segments, the key will be how they manage or balance, growth and cannibalization. So is Onvo cannibalizing the main NIO brand sales? Well, the data suggests some overlap in the target market, at least starting off. It's kind of early to say, but just having an opinion right now, if we have to judge from where we are at today, it seems that Onvo is putting some pressure on NIO's main flagship model. However, NIO seems to be leveraging Onvo as a strategic play to touch more market segments. The coming months will tell us whether this ultimately benefits NIO or begins to create some internal competition that hurts their bottom line. So anyways, always keep your eyes on the broader EV landscape and the numbers, because this story is far from over. That's it for today's episode. I hope you enjoyed our deep dive into NIO and Onvo, what's going on right now, where they are, where they stand, where they're going. If you found this episode helpful, useful, insightful, any of those things, make sure you share the video, hit the like button, click the notification bell icon, leave a comment down below. I do want to know what you guys think. Thank you for watching. Happy Sunday. We'll see you in the next episode of the Courtside Financial Podcast. Thanks for rocking with me all week. Peace out.